Most people have heard of Francis Drake and Sir Walter Raleigh. To the English, they are swashbuckling hero adventurers who gave the Spanish what for, exciting the popular imagination by sailing deep into enemy territory and back out again, punching far above their weight and coming home with vast riches. But to the Spanish, they were little more than state-sanctioned pirates, attacking fellow Christian vessels and plundering entire towns on behalf of their rapacious queen, which, to be fair, is pretty much accurate. You see, ever since the Pope had formalized possession of the New World between the Spanish and the Portuguese, granting them exclusive ownership not only of the Americas but also the Far East, other European players, notably the English and the French, took a dim view, ignoring the papal decree altogether and scrambling to get a foothold for themselves, at least in North America. Their monarchs would grant charters to aspiring adventurers to explore, claim, and establish settlements, as well as to plunder Spanish shipping, but there was often very little material support to assist them. Consequently, they were forced to raise capital through recruiting investors, often by the formation of joint venture companies, and issuing shares of the profit when an expedition concluded in what modern brokers would call terminable stock. The Crown would license a company to act on its behalf, and in return would receive a substantial share of the spoils, profit, typically at 50%. Drake, whose voyage was the first English and second overall to successfully circumnavigate the globe in 1580, returned to London with trade goods that netted his investors a profit margin of over 4,600%. How's that for a return? Unsurprisingly, Queen Elizabeth knighted him, and this lowly commoner was now given his own coat of arms, with the motto Sic Parvis Magna, from small things, greatness. Imagine being an impoverished young peasant boy, sitting, shoeless, scruffy and hungry, on the pier of any seaside town in England and looking outwards toward the open sea. How many do you think might have fantasized about sailing the seven seas, going on adventures and becoming rich and powerful, as the motto says, from humble beginnings to greatness? At a time of great social stratification, poverty and repression, who wouldn't be inspired by the possibilities, even today? Sir Walter Raleigh, on the other hand, wasn't so lucky. Let me explain. Unlike Drake, Raleigh was born into the landed gentry, which gave him plenty of opportunities to serve the crown by participating in military campaigns in Ireland and France, earning himself honours and the attention of the royal court. Handsome and charismatic, the Queen took a liking to him and granted him a charter to establish colonies in the Americas, which would serve both to profit England and act as bases against the Spanish. So far, so good. From there he would go on to chase fantasies of El Dorado, serve in Parliament, and even end up in jail, more than once. But when he plundered a Spanish town, against orders, during a truce, he not only lost his son, who was killed during the battle, but soon after he lost his own head when the Spanish demanded justice. Sir Walter Raleigh was an example of a privateer who let freedom get to his head, but his many heroic exploits endeared him to the common folk, who viewed his execution as unjust, and they lionized him for decades. Incidentally, he was also an accomplished poet, and a number of historians have suggested that he and others were the secret authors of a number of works attributed to William Shakespeare, with the figure we refer to as the Bard from Stratford-upon-Avon merely being a frontman for a secret scriptorium. See my documentary on Shakespeare, the Genius We Never Knew, for a fascinating look at this mysterious individual. Anyway, it was clear that forming joint venture companies was a great way of raising the cash needed to pursue both the Crown's political as well as economic goals. The Italians were masters of it, and their bankers in London gave the English an excellent schooling. By 1600, Queen Elizabeth I sanctioned the formation of one such corporation, the Governor and Company of Merchants of London trading into the East Indies, which history would eventually come to know as the East India Company. Elizabeth granted them a charter for 15 years, with a monopoly on all trade west of the Straits of Magellan and east of the Cape of Good Hope. Any English vessel or entity that was caught trading in that zone was deemed to be trading illegally and would have their ships, goods, and property seized and appropriated by the company, which would, of course, hand over 50% of the profits to the Crown. Within a decade, ships of the East India Company were marauding the Indian Ocean and now plundering Portuguese ships and settlements as far away as China, in cahoots with the Dutch, who had also formed a company, but whose structure was much more recognizable to us today, being that of a joint stock company, in which designated stocks could be purchased by any individual in the open market, and in which shareholders had perpetual ownership in the company, rather than just the temporary, expedition-based, terminable stock of the English variety. One of the benefits of this kind of company structure is that it spread the risk widely across hundreds of small shareholders, and also allowed for a more continuous cash flow buffer that defrayed operating costs and reinvested a portion of its profits into the growing of the business. It also had the interesting side effect of creating a completely new phenomenon, the stock exchange, where people could buy and sell their shares publicly as incoming news fluctuated the price up or down, depending on events. Investors could now make money not just through dividends, but also in trading the shares themselves. For the time being, the English were content to keep their stocks and profits jealously secure among rich private investors. But over time, they too opened up the company to public trading, though its board of directors was notorious for what we call insider trading. That is to say, timing their shareholder announcements such that they sold their own shares when profits and share prices were high, and then bought them up again, often anonymously, when announcements of loss or disaster caused a stampede to sell the now devalued stocks. As you might expect, directors frequently manipulated the market with fraudulent announcements to, shall we say, stimulate market conditions to suit themselves. Insider trading legislation was still a long way off, and company directors were, in the meantime, making a mozza on the hapless suckers who bought high and in desperation sold low. And we think today's company directors are a bunch of sharks.